JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 16th of February 2022, guys. So yeah, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which is also updated on a daily basis. So yep, check us out here on jfdbank.com, and yep, click on the research tab right there on the top. There we go. I was on the wrong page a little bit here, but there we go. So this is our page, yep, which you can update on, which is updated on a daily basis. So yep, check us out. Right now, then, this is me probably very eager to jump into the charts. So, guys, I mean, looking at this picture. So what I talked about yesterday, and kind of from the beginning of this week, I said kind of basically for now. Look, just bear with me one moment, guys. So looking at this picture here, I mean, yes, what I said before, what I said in the beginning of this week as well, that basically it's not really, I mean, that all doom and gloom, and you know, yes, we were selling off, but there we needed stronger indication. I mean, here, for example, yesterday when I said that if we do stay below this hurdle, below that 26,955 territory, then yes, further declines could be possible, but we did not. We just jumped back above it. I mean, looking at the indices, the European indices, and I'll get to DAX in a bit, and how everything reversed, you know, sharply to the upside. So yeah, don't get me wrong, I mean, yes, I mean, everything could still happen, but in general, guys, I mean, everything's not really that bad yet until we probably start getting closer to some Fed rate hikes, or in general, main central banks across the globe will start, you know, raising their interest rates a bit more sharply. Then yes, we could see a nice, good, strong move to the downside. For now, looking at this picture, yes, we have nicely rebounded, and yep, we have pushed higher here. So, but the only little issue here, of course, is the that we got a hold up near that 21-day EMA. For now. Looking at this picture here, I mean, if we do pop higher here and we do jump above that 21-day EMA, and we, most importantly, maybe climb above this hurdle right here, this 27,594 zone, which is the lowest point of December, then yes, we could go for some higher levels, and we could maybe push towards this downside resistance line taken from the high of the 14th of September. For now, I'm keeping an eye on this, and yeah, let's see how today's European and US indices play out. Shanghai Composite also had a nice good push higher, but as you can see here, we came closer to this downside line again, taken from the high of the 4th of January. But as you can see, we failed to break it. I mean, we didn't even reach that. I mean, however, don't get me wrong, is again the same story. We'll keep an eye on the European and the US indices today, just to see if they can give maybe a bit of a push here for the Asian markets as well. So yeah, a lot of things to consider. Looking at this picture, I need to see a break of this downside line and a push above that 21-day EMA in order to go for maybe a larger correction here to the upside. And the reason why I'm saying correction is because basically for now it's it's a little bit of a tricky one, because we also have this downside line taken from the high of the 13th of December, which could still play out. So in other words, for now I'm gonna keep an eye on this. I'm gonna keep an eye on this downside line and that 21-day EMA. If you're looking for a level of some sort, then you could keep an eye on the current highest point of February, if I'm not mistaken. Let me just double check. Yep, that's correct. The current highest point of February near the 3,500 level. So yeah, if we clear that one, then yes, this may attract a few more buyers into the game. Evo, yep, good morning to you too. I hope you're having a wonderful start of Wednesday, and I hope everybody else who's joining in are having a wonderful start of Wednesday. So coming back to this, the German index DAX here, beautiful rebound here, and this is what I said to you guys yesterday when I was covering the German index, and I said that wait for it, because in a way the fact that we had a false breakout here, that kind of raised a few concerns in the bear block, and this is where the bulls kind of took over. And as you look at this beautiful sharp move to the upside, we managed to climb above the 200-day EMA as well. So in a way, a lot of things are kind of leaning towards the upside now. And let me just double check the cash index very quickly. So yeah, we are currently sitting at around 15,453 area, something like that. So we are above yesterday's close, somewhere around here, and we're actually also above the 21-day EMA right now. So long story short, if you're looking for some upside, then what I said before, guys, preferably I would like to see a push above this barrier, this 15,728 zone, just to be a little bit more on the safe side, because a move here to the upside up until this highlighted territory, well, it might be a bit of a tricky one, because we do have some obstacles on the way higher, and we have that 100-day EMA as well. So I rather stick to this area, because at the same time, because if we are confirming the range here, this wide range that I kept on talking about, and if we do clear this 15,728 zone, then well, we could see a move higher towards the upper side of this range. So keep an eye on this one, be very careful, and let's take it from there, guys. Now, Nasdaq 100. Nasdaq 100 here, beautiful rebound as well. So this is what I talked about yesterday, guys. I mean, I looked at this index and I said that let's see if this is not going to end up being somewhat of a possible kind of falling channel pattern. And as you can see here, we have we are kind of confirming that one. And most importantly for me, for the upside, we managed to climb above this highlighted territory right here, this 14,471 zone. I've talked about this level, and I said that if we do pop above it, then we'll aim for the upside a little bit here, not really sharply to the upside, but towards the upper side of the falling channel. So I think it should be somewhere drawn like this. I mean, I've removed that previous line, which was a little bit more correct than this one. So roughly, this is again a rough sketch here. I'm not saying that this is exactly, you know, how the lines should be, but on your charts you can draw it a little bit more accurately than here. But roughly, right now, guys, looking at this picture, I mean, I'm kind of leaning a little bit more towards the upside in the short run. Of course, let's not forget that, I mean, overall, we're still kind of, you know, in a decline. We're still below all of the EMAs here, so there is still a possibility for this one to, you know, roll over and go down, but for now it's looking quite interesting. And let's put it this way, I'm gonna put this arrow like this if the upper side of the range, which actually sorry, not the range, with the falling channel, which is also actually could be near that 200-day EMA or that 21-day EMA. So this whole area, if it provides a good strong resistance, then yes, we could see we could see another slide here, another move lower. But if if it fails to hold, if this resistance area fails to hold, then a nice good break of it may open the door towards higher levels, and then we could go for the upside. So in other words, for now, keep your eyes on this. Let's see how all this is going to play out. And it's like I said, from the very short-term perspective, I'm kind of leaning a little bit more towards the upside, unless this suddenly sharply falls back below this 14,471 zone. And if it does something like that, yep, we're back to kind of, aiming lower, and then we'll just have to take it from there, guys. Dow Jones Industrial Average. Now, beautiful rebound. And if you remember yesterday as well, in the beginning of this week, I also talked about this potential idea of a broadening triangle here. And, well, so far it's kind of working out, I would say, because we did rebound from the lower side of this broadening triangle, which is, let me get rid of this line, it's a little bit in the way, which is around here. So yep, we jumped back above this 34,815 zone. That I talked about this level yesterday, and we stayed above it. So in a way, I'm kind of leaning towards the upside right now here. However, I'm going to be very careful and target the this area first, the area around the 21-day and the 100-day EMAs. If we clear those, then yes, I'll go for even higher levels. But at the moment, let's be careful. Let's keep an eye on this, and yeah, let's see how all this is going to play out, guys. For now, I'm keeping an eye on this area right here near the 21-day and the 100-day EMAs. For me, on my chart, they are roughly around the 35,166 and the 35,285 levels. DXY dollar index, so drifted back down, guys, and well, I mean, this 50% retracement on the Fibonacci will play out nicely, and well, I mean, this is where probably it's time to get rid of this Fibonacci, because again, this was a good retracement. We had a good 50% recovery here. However, it kind of showed that it failed to move, above it. Yes, we did get that retracement back to the 21-day EMA. I mentioned that one, but we kind of failed to rebound from that 21-day EMA. However, don't get me wrong. Of course, it's just the kind of the beginning of the day right now, so maybe we could still move higher, but this is where I need to adjust, I think, the levels a little bit in order for me to kind of so something around here, I believe that could be a little bit more valid. So 96.30, that's what I'm going to keep an eye on for now. This is going to be my barrier for the upside. If we break it, of course, then yes, we'll go for this inside swing low of the 28th of January. Near the 97.05 level, and then so on and so on. But at the moment, guys, if we somehow stay below that 21-day EMA, well, I would say I will aim for these two upside lines, these two upside support lines again, and then we'll just take it from there. Of course, probably the main target in this scenario would be the 100-day EMA, because as you can see, it has been like acting as a strong area of support recently. So yeah, that could be a good target, but only, as I said, if we do stay below that 21-day EMA. And jumping into gold very quickly. So gold, yeah, drifted lower, and we fell back inside the rising channel. And this is what I talked about, guys, yesterday, that given that we had already a huge kind of sharp move higher, then yeah, I mean, we had this good move higher. We needed that confirmation break, and we needed the commodity to stay above that 1877 zone, and we failed to stay above it. We did have a little brief visit above it, but then yeah, it quickly turned around. But that's all fine. I mean, that's all in line with the expectations. And another thing, what I said, that if it starts kind of falling somewhere below that 1847 zone, somewhere around here, then maybe yeah, we could consider a larger here correction correction to the downside, but if it also starts falling below that 1830 zone, now this is where, yeah, we could start aiming for the lower side of this rising channel. I'm gonna keep it for now, although we have violated the pattern right here, so in a way it's not really, like I say, shaping up to be an ideal one. However, like I said, I'll keep this for now, and yeah, if we're looking for some higher levels, then I would like to see a push above this barrier right here. Yeah, if we do drop below that 1830 zone, then we could consider a move towards this lower side of the rising channel. Now, okay, in terms of gold, oh, and by the way, my favorite Fibonacci level here, and I think that we have nicely retraced the 23.6% yep, on the Fibonacci. We did try to move towards the 38.2, but just fell shy of a few points from hitting that. But again, yeah, we did retrace that 23.6. So now it's going to be, like I said, now we can scrap this Fibonacci because now the main focus for me personally will be somewhere. I will keep an eye on this hurdle, this 1847-48 zone, somewhere around here. If we start dropping below it, I'll aim for the 1830 zone or that 21-day EMA. WTI oil. So beautiful retracement here, beautiful move lower, and this is the moment I need to get rid of this upside line. No longer kind of needed. Of course, I could try to draw a shorter term one here, but to be honest, it's still going to be tentative. Now, what I would ideally like to draw here, and let me just see where I can capture that. Yeah, okay. There we go. I think this is what I was hoping to see. So, I mean, we could draw something like this, like a parallel channel here, but again, it's really not ideal, I would say. So, I mean, we're trying to kind of find something somewhere where maybe it's not, but okay, this is maybe a little bit something more closer to what I was hoping to see, but the upper side here, it's not really, you know, it's not really working out perfectly, and this is where it's kind of leading me towards the idea, maybe, just maybe, this is not a rising channel, but maybe more of a rising wedge pattern. So basically, in other words, something like this here, guys. So something like this and something like that. So if that's the case, if we're not seeing a rising channel here but more of a rising wedge, now, well, according to all the TA rules, this tends to break to the downside, and however, until we get a break of the lower side of that rising wedge, we cannot really, you know, get comfortable with that idea. So I would say, I mean, if you're looking for some downside on this one, and if you're already, like, you know, like trying to short this, I mean, first of all, I hope, I mean, you had your stop losses in place, but yeah, I mean, looking at this picture right now, I would prefer actually to see a drop below yesterday's low near the 90.69 level, somewhere around here, and then I would go for some lower levels. The only issue here is that I will be very careful near this hurdle right here, this 88.82 zone, and yeah, if we get a little hold up right there, my next prediction, let's call it that way, first of all, it could be a nice area, of support here, not only because we had some, like, you know, a hold up here previously, then a support here again, so it might play it out as a support again, but we have the 21-day EMA as well, which could add additional support to all this, and not to mention me trying to get to kind of ahead of myself again. Oh, actually, I can reuse. I'll reuse this. I'll use this later, but I'll reuse this arrow, and something like this might be a possibility, guys. So this is me, I mean, referring to, again, to US dollar against the Russian ruble, which I will pick up in a bit, because that kind of is working out perfectly and according to the same scenario that I've talked about. So for now, I would say, looking at this picture, yes, I'm kind of leaning a little bit more towards the downside, of course. However, I need to kind of this is where I need to kind of contradict myself and just kind of, you know, switch on my cold logic, because as long as it stays within the rising wedge pattern, it could continue, you know, moving higher. It doesn't really mean that, you know, we could start, you know, drifting, for sure, drifting lower here, breaking the lower side. No, we still need that confirmation break. So we can't really, like, let's say, do much here. So because it's, as you can see here, it's rebounding from this lower side of the rising wedge. So, you know, it might still drift nicely to the upside. However, if it breaks the lower side, that's where it could become quite interesting, and this is where all my little drawings with predictions could come in. But of course, let's not rush into anything. Let's see how this is going to play out. So this is my kind of idea. Again, let's wait and see. For now, looking at this, if we do rebound, for example, from the lower side of the rising wedge here, I would prefer to wait for a push above the 94.89 level, somewhere around here, and then go for some higher levels. All this area right here, for me, will be somewhat of a neutral one. Bitcoin, very quickly on that one, had a good push yesterday, and again, it got a hold up near that 44,445 level. For now, at this point here, I'm keeping an eye on this. I'm gonna see how this area is going to play out. This 44,445 level, if we do climb and stay above it, yes, I will aim for that 100-day EMA, for that 200-day EMA, but if that all gets cleared, well, I mean, welcome to some further upside, guys. Again, we are at a very interesting spot right now, so let's see how this is going to play out. If it starts dropping lower and breaks below this upside line right here, taken from the low, the 24th of January, I'll aim for the downside. Jumping into a few pairs very quickly, AUD and ZD. I'm not going to spend too much time on this one, but I'm just going to mention that, boom, we've managed to clear this area with the highlighted territory. And yesterday when I talked about this, I said, yeah, we had a bit of a decline, but I mean, that was seen as a nice little correction lower. And I said that as long as we remain above this upside line, we will continue aiming higher. And we got that push above the 1.0770 zone, and we're still trading above it. So yeah, I mean, for now, as long as it stays above it, I'm gonna aim for some higher levels. If we do break this upside line and drop below the 1.0715 territory right here, marked by the low of the 11th of February, that's when I will maybe consider a bit of a move to the downside and a drop below that 21-day EMA. Jumping into AUD USD, so yeah, beautiful move higher. And again, this is what I was talking about. So there we go, this hurdle right here, the 0.7110. I said I'm waiting for a good drop below it, and I would like to see the body of the daily candle remaining below that hurdle. What did we get? We just get another false breakout, and yep, that's what I was referring to. And I said that wait for it, but for the upside, I would actually prefer. Yes, we gotta move higher. Okay, that's great. I mean, we broke the downside line, but what I need here is a nice good pop above this 0.7185 level right here, and then I will get a little bit more excited with the upside. For now, I'm just observing this one because basically, let's not forget that, you know, we could still, let's say, travel a little bit higher here, you know, find resistance and then move down again. So we, you know, and then we'll end up just forming a range of some sort. So, and then we will continue oscillating around the 21-day EMA. So basically, yeah, not ideal. Unless you do like to trade ranges, but for now, yeah, keep your eyes on these two barriers, and let's see how this is going to play out. AUSD CAD, very quickly on that one, still flirting with that downside line, guys. I mean, so yeah, we're just observing this one. We're watching the price action, and for the downside, I still need to see that drop below that 1.2650 zone. For the upside, you know, straightforward, I need to see a push above that barrier right here, this 1.2787 level, and then yeah, we could go for some higher levels. Now, US dollar against the Russian ruble here. So looking at this picture, basically this is me trying to calm myself down and about that how well this got predicted, because we are forming a nice head and shoulders pattern, guys. I mean, this is looking quite beautiful, and this, especially with all the levels here, I mean, just everything was just playing out nicely here. So yeah, we are now seeing that move to the downside. So we got that curve initially to the upside, we got a hold up here and near that 77.33 zone, and now we're seeing, yeah, a move back down. So the next thing that I'm going to be keeping an eye on is, of course, the so-called neckline. And yeah, if we do break this neckline, this 70 at 74.27, well, at the same time, we'll be placed below all of the EMAs here, and further declines could be possible, guys. So keep that in mind. So my next target then will be somewhere around here, roughly around here, guys. And probably this is where I'll need to draw my arrow up until yep, 72.25, roughly around there, guys. That's gonna be like my next little target. The Gbp Chf, very quickly on that one. Again, also just a quick update, not spending too much time on this one. Yeah, we're still waiting for that pop, if that's going to happen, of course, because at the moment, yeah, we're just kind of stuck below this downside line still. So this downside line is taken from the high of the 5th of April of last year. But yeah, I mean, if we're looking for, for some upside and something a little bit more reassuring, that's what me personally, what I'm keeping an eye on here is this 1.2610 zone, approximately around here. We clear that. Yep, this will confirm a forthcoming higher high and potentially move further north could be possible. GBP USD, similar story. This one is a little bit more reassuring, but yeah, what I talked about yesterday, guys, that I'm keeping an eye on this downside line taken from the high the 13th of January, and I'm keeping an eye on this hurdle right here, the 1.3572 zone. But as I said before, for me, my preference is here, this scenario, to wait for a breakout, above the current highest point of February. However, I do understand that, we could be maybe missing out on a bit of territory, so that's why, for example, if we do pop above the 1.3572 zone, I'll keep an eye on the 200-day EMA. If we clear that, then my next targets are these, the 1.3628 and the 1.3644 levels. Now, for now, that's the game plan. For the downside, of course, I need to see a break of the upside line, but of course, depending on where we're going to be, maybe this level could come in, the 1.3491 zone. But like I said, let's see for now. For now, this is, like I said, for now, this is the game plan. I'm leaning a little bit more towards the upside. However, I need a confirmation break first. Euro against the South African rand, guys. I talked about the US dollar against the South African rand recently because it was holding on to its upside support line. But here, now I want to pick up on the euro against the South African rand. The euro against the South African rand. So yeah. Basically, first of all, let's establish a few trend lines. We have this one right there, and we have this one right here. In general, yes, from the kind of shorter term perspective, everything's looking quite bearish. It seems that, yes, the euro might weaken against the South African rand here. What's next? Of course, the lowest point of January. That's what I'm keeping an eye on, the 17 level here. If we clear that, then lower levels could be met, and then of course I'll aim for that lowest point of October, or even better, the lowest point of September right here, and then we'll take it from there. So in other words, guys, if you're looking for some downside, wait for a confirmation break here. There we go, right here. For the upside, well, this is going to be an interesting one because, I mean, we could still rebound, we could go higher. What I'm going to do here is I'm going to keep an eye on yesterday's high. If we do pop above the 17.27 zone, approximately around there, yeah, I'll go for, for a bit of a maybe larger correction here to the upside. For now, it's just like it is closer to this hurdle, so I'm keeping an eye on it on this key support zone. And finally, EURUSD beautiful rebound from that downside line, climbed higher, but as I said before, If it stays in this territory, for me, that's nothing. I mean, I'm just observing the price action. I'm not really liking this. So yeah, I would prefer to wait for a push above this barrier right there, and then go and then aim for some higher levels. For the downside, I would prefer to see a drop below this little territory. Oh, no. Oh, well, actually, let me get, I'll get this, yep, and I'll remove this arrow. There we go. And I prefer, for the downside, I would prefer to see a drop below this area right there, this 1.1235 zone, and then we'll take it from there. So guys, that's it for this session. I really thank you for joining in and watching this one till the end. I really appreciate that. So if you want to have if you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, guys, have a wonderful trading day. Stay safe, have your stop losses in place, and everything will be fine. So thank you very much, and bye bye.